Hello and welcome to the Global Forecast from the Economist Intelligence Unit. I'm Tony McMahon, and as ever I'm joined by Robin Bew. Now in this programme we're going to look ahead at the prospects for 2011, starting with the United States, where you're revising growth upwards. So what are the key indicators that have given you grounds for cautious optimism?
Well, obviously there's been some changes on the fiscal front. We're seeing a bit more fiscal expansion going to the economy. Bush tax cuts have been extended, unemployment benefits are being extended. So there's definitely quite a considerable boost going through. Plus, of course, the Fed is still engaged in QE2. Those two things combined, we think, will mean next year's a little bit stronger than was previously the case. And the macroeconomic data kind of bears that out. It looks a little bit better than perhaps a few months ago. So there is a sense of, as you say, cautious optimism.
Looking at the emerging markets, there are calls for monetary tightening amid fears over inflationary pressures. What do you think is the chance of a macroeconomic shock coming from these economies in 2011?
Well, it's definitely possible. We're already forecasting a lot of these economies are going to slow down. I mean, inflation in China has just gone over 5%, and the government's trying to rein that in, not necessarily through interest rates at the moment, although that will probably come, but certainly through other policies to restrain bank lending. And more broadly around the emerging markets, particularly in Asia, you're seeing inflationary pressures start to build, and currencies are generally pretty soft because so many of them are effectively pegged against the dollar. They're importing very low US interest rates. And I think you will need to see more tightening action going on, certainly in Asia and perhaps in other emerging markets too, over the course of the next year. And if they get that wrong, then clearly you could see, as you were saying, a shock. We think they'll probably get it right and that growth will merely slow. But I think we do have to recognise that next year the emerging markets will not be growing as quickly as this year. That's because of the policy tightening we're bound to see because of inflationary pressures.
The Eurozone had a turbulent 2010, but could you see a scenario in 2011 where Spain, let alone Portugal, comes cap in hand to the European Union? And what impact would that have on the EU and on bond markets?
Well, at the moment, our forecast is that Portugal will need to go, as you say, cap in hand in order to get a bailout. We think that already market sentiment has moved too far against them. Their deficit is not that big, but they do have a very heavy rollover requirement next year, and we don't think they're going to be able to meet that without assistance. Spain is the big one. Our forecast at the moment is that Spain will get through without having to ask for assistance, but I think it's pretty clear that that's a close call, that they may actually be forced into it. And of course, the European Union extremely worried about the implications of that, partly because they're going to struggle to get the money together to provide the funds in the first place, but also because there's no real reason why you would think it would stop at Spain. If it happens to Spain, then you immediately look to Italy, then you go and look to Belgium. So a good deal of nervousness, and I think the pressure during the course of next year will be for the European Union, or at least the Eurozone economies, to come up with some kind of policy which stops the rot, which really means that financial markets understand that they're serious about preventing this contagion from going any further. And you look at growth over the course of the next year or so, clearly the economies which are very badly affected are going to do very badly. Most of them are going to shrink or at least go sideways. And around the middle economies, though, places like Germany, growth is still reasonably strong. Now, because we think that some of their major markets will slow a bit, such as China, and Germany probably won't do quite as well next year as they did this year. But there is a very marked divergence between the Eurozone, between its peripheral countries, which are doing very badly, and Germany, which is very strong. And I think that as you go into next year, while Germany will not be quite as robust as it has been, that story will continue broadly to remain in place. So Germany's strong, rest are very weak.
And 2011, where do you see global interest rates going?
Nowhere, I think, is probably the short answer. When you look at the rich economies around the world, certainly if you look to the UK, you look to the Eurozone in aggregate, and you look to the US, I think the concerns next year are going to continue to be about where's the growth coming from. Is this recovery sustainable to the extent that we're seeing a recovery, and obviously in bits of Europe we're not. A real worry about long-run issues about deflation, the weight of balance sheets hanging over them, and I think on the basis of that central banks will be on the sidelines in terms of interest rates, and in fact you're seeing some attempt to stimulate the economy through QE and other special policies. If you look to the emerging markets, though, I think higher interest rates are pretty likely. As we said, there's overheating going on there, inflation's rising, and they really need to start to take that more seriously.
And what about house prices, real estate prices in the US and the UK?
Well, US house prices have kind of bounced very modestly off a very, very low floor. Looks to us again as if when you look sideways is about as much as you can probably hope for. And consumers in both the US and the UK hugely burdened with debt. A real sense that this economic recovery, although in progress, is going to be a slow and grinding one. People still worried about their jobs, and that's not an environment where you'd expect to see house prices or indeed asset prices more broadly doing really well.
And what about consumer confidence?
Well, I think that next year you're really going to see, certainly in the UK, a sense of considerable nervousness coming into the UK. At the moment, there's a lot of talk about fiscal austerity, but it's important to remember that practically nothing's happened yet. It's only next year that you're really going to start to see the government really cut back on spending very aggressively. And so we're almost in a bit of a false dawn. Everyone's reading the stories in the newspaper, but it's next year that the cuts start to bite. And I suspect that people are going to feel pretty depressed about that. Now, in the US, of course, they're still embarking on fiscal stimulus, so maybe their mood will be a bit better. But it's important to remember that there as well, consumers are very heavily indebted, and there is a long-run concern about what that means for them. And so I think this is a recovery which broadly is not going to be driven by consumers, and that most major markets consumers are going to feel pretty depressed for some time to come.
And you talk about shaky confidence. Obviously, unemployment will be a major factor there. So how many of us are going to lose our jobs in 2011?
Well, I think unemployment, the question in a market like the UK is whether the cuts that we're seeing in the public sector can be offset to any great extent by what we're seeing in the private sector. And we think the best you can probably hope for is that the two will largely offset and that unemployment will go sideways. But it's difficult to see the jobs market substantially improving next year. And you could imagine that if the private sector starts to take fright, that they see that the government spending cuts are starting to crimp the economy more broadly, that unemployment could even go up further. So I think that the news on the jobs front, the best you can hope for is no change, and it could be worse than that.
Thank you, Robin. Well, 2011 looks like it's going to be an interesting one. You can follow all the trends here on Global Forecast, so join us again in January. And until then, thank you for watching.